Good morning, one and all. I, Deepak Jain, would like to welcome everyone for today's session. In our last session, we were able basics of derivatives, wherein Miraj about futures, options, types of options, and how to take long positions in derivatives as well as short positions. He even explained us about call and put options. And the best part, what last time was how to pull out data for trading in derivatives. After the session, we got various feedback from our client. And the best part, what they liked in last session was how to pull out data from NSE website for initiating a trade in derivatives. You can decide the strike price in options. So in continuation with the previous session, today Miraj is going to explain us of traders. In this, he will explain us as how to identify for medium term and short term. He will also explain us about various trading indicators like RSI and pivot. So before handling today's session, I would like to give a small introduction about Miraj. Miraj has got almost 2 decades of experience in stock market research and analytics. He has been regularly flashing on various news channels like Z Business and CNBC Awaaz. Customers are getting his regular research calls on Telegram channel. So I would to all those participants who have not joined our Telegram channel can join it and get benefited from our research updates. Now, too much time, I would like to hand over today's session to Mr. Miraj. Over to you, Miraj.
Thank you, Deepak, and welcome everyone and good morning. So today's session would cover basically, points, or it would cover how a trader can, when he has what all things he needs to what are things he needs to be careful of, or what are things he needs to take care of before entering or after entering, how would he monitor the position. Deepak, my voice is clear, right?
Yes, Miraj.
Okay. And so things which we will cover in this session, it is how data which is available on NSE's and BSE's website, how that can be utilized overall for how we can utilize that data, and how that data can be helpful, and what all data should be looked out for, and from where we can pull that data. Data points which are things we should be careful before entering the trade, and which should be monitored on constant basis, where we can know about the company more. ATP and pivot and how their calculations are and how they are important. This data we give it on our daily report also. There are almost 120 stocks on which we give our this ATP calculations and pivot calculations also. And I'll share you the formulas on this PPT, where you can choose your stocks and calculate it. It is simple arithmetic calculations for pivot, but generally for traders, that works really well. Then moving averages and crossovers, and which averages one should look on a trading perspective, and when someone is taking a view overall on the index or on the stock, which averages to look at. And then indicators such as RSI, stochastics, and how standalone also they work, and when used with averages also they work. So that is how this overall presentation would be. So the data which are available on BSE and NSE's website. If you go to the index data, then it will give you the open, high, low of previous days, 52-week high, 52-week low for various indices and also for stock. Now, why these data are important, I would give you few instances where such data are very important, and they are, trend setting for the day also. Say, for example, if you have open and high for a stock or an index, which is exactly similar or slightly different. Say, for example, Nifty opened at 17,205 and the high was also 17,205. So that means unless from that day, if that high is not crossed, that high can be taken as a stop loss for you, and you can, look out for short positions. Similarly, if open and low are same for the day, most of the time we would see the trend for the day would remain on the upside. So these are very simple things which one can look out during the day also, and overall one can set on trends on that. Then 52-week high and 52-week low. Generally, if a stock breaks its 52-week low, that means for the entire year this was the lowest position for the year. And if that happens, then there are chances that further correction would be possible into that stock. And once you cross 52-week high, then the previous 52-week high would become a strong support for that stock. And then when you see the stock might consolidate around that previous 52-week high for a few days, or for a day or so might go below during the day but not close below that. So then the momentum would be very strong, and you can see that those stocks can see very strong upward momentum or upside. So these kind of data is easily available on your NSE and BSE's website. And if you enter any stock or index, these data are displayed. Just to give you an overview how it is, go to the site and show you.
Miraj, sorry to interrupt, but your voice is breaking continuously.
Okay. Is the voice better now?
Yes, Miraj.
Deepak, is the voice better now? Is it still breaking?
No, it's not breaking as of now.
Yeah, okay. Yeah, so what I was talking about 52-week high low, if you go to the NSE's website and just put any stock, see, most of your data, it will come over here. Okay, what is the total PE for the stock? Sectorial PE also will come. Previous close, open, close, weighted average price, lower band, upper band. This is your intraday high low, your 52-week high low, total traded volume, value, market cap. So these all are important data which one can see. Now, what we talked about was 52-week high low. So this is where you can see that, and plus during the day high low. And if open and low is same, open and close is same. So intraday high lows are here. So if your open and low are same, see, for example, if I want to say for that, if it is same, then the overall trend for the day would be on the upper side. The lower end would be the support for it. And if open and high are same, the stock would trend towards the lower side, with this becoming the very strong resistance for it. And this weighted average price, it is also very important. If during the day stock crosses this weighted average price and sustains for at least 10 to 15 minutes, then you can see this becoming a very strong support for the stock. So this would keep on moving as the stock keeps moving up. So that means the automatically stop loss keeps on moving up as the stock starts to perform. And once it goes below it, then that would be your time to exit the stock. So such kind of very simple things can be picked up overall, and this would be helpful for traders as well as medium-term traders or intraday traders. All of them can use these kind of information. Then corporate announcements are there. The corporate announcements or corporate actions or events which are initiated by the companies, they come here. These includes many things such as dividend declaration, ex date, splits, bonuses. Even there are data which are given where, if a company has entered into any agreement or has given anything, if there is acquisitions are there, that all company has to declare, and BSE and NSE are liable to upload on it. So that also is available. Even financial results or shareholding patterns, or when the results are going to be declared, or is the date for the result out, overall what would be there discussed in the meeting. Are they going to discuss about dividend, or are they going to discuss about bonus? Those all things are there in the NSE and BSE's website into corporate actions or corporate announcements also. So this what already we have done. We went to the market data indices and we got all the data. See, these kind of data also you can go and get. I'll show you on the site itself. Where you go to market data. Okay. See, the tabs I have given here. So if you want, you can take a photo or a snapshot of this screen or slide also. Where you go to nseindia.com, then you click on market data, and you double click on the indices tab, and this will open. Market data, indices, and you will get everything. What is the current for all the indexes? This is majorly for indexes. If you want, for stocks, I have shown you individually how you can do it. So this is open, high, low, previous close, previous day, 1 week ago close, 1 month ago close, 1 year, 52-week high, 52-week low, and a small technical representation. But majorly the important data are open, high, low, previous close, and your previous day's close, 1 week these close, and open and high if they are matching a 52-week high low data. So this is how you can take for indices also. Majorly indices what we see is Nifty and Bank Nifty. So those are available over here. So you can go to the entire list of indices. See sectorial indices, you'll get Nifty Bank also, Nifty Financial Services also. So these are what they are traded currently. So it all is available. Even if you want any indices, there are a lot of indices and everything given by the exchanges. We generally tend to ignore BSE and NSE's website, but whatever data any company has to put in has to be available in BSE and NSE's website. So these are the two websites which you should be using regularly. Now, if you for BSE, how you can get, so you go to the BSE India's website. In that, you type the security name in the search bar, and you click on corporate tab announcement to find all the corporate actions. For corporate actions or anything, BSE is much user friendly. That is the reason we have taken the BSE's website. NSE's website is a little bit of a complex to use, and plus they keep on juggling between the new and the old website. So once you go to the BSE's website, if you press any security, here I'm taking Reliance as an example. So please don't consider this any that it's just for an illustrative purpose. So then if you go to the corporate action announcement tab and then click on data. So this will give you corporate actions like dividends, stock split, bonus, anything. And if you want to go for the result, you need to go to this BSE India corporate's forthcoming results. And if you type this also, you will go to the upcoming results. Now, first we'll see the corporate actions and everything. So see, I've come to the Reliance page. Here also all the data will be available: 52-week high, low, upper band, lower band, 2-week average traded quantity, total quantity traded, turnover, everything is available in BSE as well as NSE. Layouts are different, so whichever is more user friendly to you, you can use it. So you have graphical representation, market depth, that is the buyer and seller, but this will be for the BSE. That is the reason to see the price data. We take NSE because that is more frequently traded and higher traded for few stocks. Now to see in short what are the latest announcements, you can get it over here also on the top. That is the reason we say for these all announcements and everything, this is much user friendly. Any corporate actions are there, dates you can see. The ex date for the final dividend was 11/6/2021. Dividend is there, right issue, whatever it is there. Any bulk deals, what has happened will also come here. A very short previous result will be displayed over here. Now, if you go to this corporate action tab, so then you'll get the entire history. If you want to see any previous histories also, all your corporate actions will be here. So all the ex dates of dividend from 2001 to 2021 is given over here. And if you click at this small arrow, it will take you even further inside, where you can put the segment from date to date if you want to see, and you want to select any purpose. If there was any buyback or dividend or preferential dividend, e-voting, EGM, exchange certificate, whatever you want to choose the topic, you can choose and you can search. So that gives you a little bit more of a detailed search option also. Now, besides this, there is another tab called as corporate announcements. So any announcement these companies have made, that will also come over here. So this is what they have made: loss of certificate or duplicate certificates if they have issued, then details of loss of certificate, news clarification. So there was some news which company has clarified, so you can just click on this to read also. Seeking clarification on media report that Reliance Industry Arm grants 750 crore loan to Shapoorji Pallonji, which appeared in the Economic Times of India. At outset, we state that in our complete compliance and disclosure requirement under the regulations, the grant of loan described by the media by Reliance Venture, a non-banking financial company registered with RBI, to Sterling Williamson Private Limited, did not require any disclosure. So they have clarified about some loans or something which was there in the news. So any wrong rumors also come, companies give clarifications over here. So whenever you think anything of these sort, and generally the medias also pick up most of the announcements from here, be it during the day or wherever it is. So I'll also show you from where you can get, all the companies and every announcements which you can track, that is available on the NSE's website. If you go to here, go to the corporates tab, then there you will be having corporate announcements, corporate information announcements. If you want to take a screenshot, I'll hold it for a second and you can take the screenshot. Once you go to the announcement, here you can see equity, then corporate information if you want to see latest announcements, what they have done. So Power Grid has given the investor presentation, Cadilla has given analyst and institution meet update, so whom they have met. See if you can open here. And you can see. So that way on live basis, this gets updated. So if you keep this also, you might see, anything new which has come for a company. Now, see, PVR has given a clarification over here. So what that clarification is there? Approval of employee stock option plan in the board meeting. So about that, they have given some clarification. So anything which company feels that, needs to be updated as per compliances comes over here. So that will give you, and this is not, if you can see, there are 53 pages in total, 1045 items displayed. So this is very dynamic, Jan 29. So even today, at current juncture, 5 minutes before there was an update. Okay, so it is very dynamic. Even if you can see 23:59 is also there an update. So at 12 o'clock also. So it is not that only during market hour this gets updated. This gets updated continuously as and when the companies give their disclosures, the exchanges have to update. So this is a very good way to get it for the entire day. And individually also, if you want to see, I have already shown you. And for results, this is the site bscindia.com/corporates, and then there is forthcoming result. So that would a results calendar forthcoming. Here you can get all the results. You just need to enter the name and it will show when it is the result dates have come or not come. Say power grid, because we saw the thing, then if you see, then you submit. So the result date has already gone. So it is not showing here. Even Reliance result date is gone. Say for example, if you want to see if someone's stock's result date is coming or not. Say for example, Ultratech. The result date is not out here yet. Okay, so if it is not there, it won't come. But you want to say what are the results, say from today, 29th Jan to 31st of Jan, and you submit. So then you'll get all these stock companies which will be declaring dividend. Result. Okay, so if you are tracking any companies, you can come see. Then there are NTPC which is going to get declared its result, which is today, 29th of Jan. So this is what you will get. Date wise it is sorted. And to be an easier, you can do is you can have it this downloaded also from this tab. In Excel opens, and then you can filter and see also whatever you want. So, and the other thing, if you find another tab where you know if result dates have come or not come, then it's a simpler thing to do is, another way to go is you can go to moneycontrol.com. See, these all are free options which one should always explore. This is also a very good site one can explore for results. You go to markets. So I'm again repeating the path. Go to markets, go to earnings. Since we are into the result season, I'm just stressing a little bit more over here. Result calendar and view all. This will give you all the results, and if you type, you'll get, say for example, NTPC for 3 so NTPC 29th is the result. The live price also will be displayed. So this is the another way to do that. So this is what all we have given in the presentation, how to get over there, which I've just showed you. The corporate announcements and corporate actions, which I have already shown you. All the announcements and actions for a particular stock you will get here. And if you want to see the overall thing also, you can get it. Then besides that, the result part also I've showed you, BSC data screener. So this is then another part where you can, just a second. This is what also I've shown you, all the data, 52-week high, low, upper band, lower band, total turnover and everything, what you can do from the BSC's website also. We saw it similarly from NSC's website, and this is how you can do it from the BSC website also, which I have taken you through. Now, things which are important to see, even if you go through the BSC's website or NSC's website, first is market cap. Market cap for a company is very important. Companies with very low market cap can have or can be manipulated very easily. So it should be avoided. And in current juncture, if you see, it should be taken more carefully, because what we have seen is that companies with small market cap are taken up with continuous upper circuits, and then once the price gets 2x 3x, it gets floated into the market, some news or something comes up, then general public or retail participants enter, and then it is continuously on lower circuits. One prime example is TTML, Tata Tele Maharashtra. Though it was a Tata company, it is not necessary that if it is a Tata company, it has to be a good company. It was not making any profits. There were no businesses. It went up from what price, if I can just show you how risky, these companies can be. It became a huge market cap, and now it is almost you can see from what price it has started to run up. 12 rupees. If I do monthly chart, you'll notice it even more. So as 1 rupee, it has started to make rallies in upper circuits, then continuously down. Again, all upper circuit till 280, 300, where, and from these levels, 140, 200 people have been starting to manipulate the stock. And now from here, we have not got even a single day to exit the stock. It has been continuously on lower circuit. It has almost lost 50% from 300 to 150. And still, when it will open, no one knows. And I'm sure it will come all the way down here only. So even if it is a group which is known for its compliances and everything, there is always a few outliers in that particular group also. Now, if you put this into the things which I was trying to highlight, you look at the EPS, it is negative. That means it doesn't make profits. Okay, PE negative, price to book negative, cumulative EPS negative. So company does not make profits at all. What is the 52-week low C? 10 rupees. 52-week high 291. And it will continuously be see average. There's no volume now. Not a one, even 1 lakh shares don't get traded. And when it was at circuit, it was huge circuits. Market cap, why market cap is important? Now you can notice after such a huge jump also, the free floating market cap is not at all there. So all the shares, they are not on free float. So that is a controlled share. Okay. So this is what you need to take. If there is no EPS, earnings are not there for the company, you should never invest into it. Whenever you have a negative EPS, please avoid that company. It is possible that it may go up, come down, give profits, but ultimately you would get stuck somewhere. If you look at the shareholding pattern, then this is a holding company. Promoter constantly holds that much, and there's no float in the public. Okay, so it was very easy for this shares to get manipulated. Sometimes if promoter is holding more of the shares, public is not holding, that is generally a good sign. But if you are not a profit making company, it can turn against you also. Now just see the peer group, which companies are its competitors. Now look at Bharti Airtel, look at the management or the company, how profit making it is. Another company, MTNL, another again loss making company. Quadrant, no comparison. So in this entire segment, only survivor was Bharti Airtel. So this also would give you an idea that this is not an easy business to do, and that is the reason even the group like Tata also is not able to succeed or be successful into this. Another important thing which you can look is over here. If this is higher, 30% of margin is required. Now you know that VAR margin is applicable even when you are putting your cash trades. So that means 30% you need to put in upfront as due to the peak margin rules. So if higher the margin, that means the stock is illiquid or it is more volatile. So this is a one-page screener. What we have spent just 5 minutes to look about the company, and we have come to know that it is not worth putting our money into it. Okay, so this is how you can before entering a trade, just scan a company to very few basic parameters. So that is the reason I had given you this background earlier, so that once we come in, you can see how it easily gels into it. A market cap is small, After such a big rise only, it has come out to 30,000 crore market cap. Otherwise, the market cap earlier was very small. There is no EPS. The company does not earn profit. If there is no profit, there is no earnings. The price to earning ratio will be negative. And other thing, price to earning ratio positive also. But if it is on a very high side compared to its peers or overall market, then that is also one thing which one needs to take care of. So for example, in that case, what we have seen recently, though we are not saying that this is a bad company, but it is an expensive company. It is not an uh, so now you see here the PE, it is at around 56. While as if you see the overall industry PE for a pharma company, it would be around 13, 14 or 15. So let's do another site which I will now introduce to you, where you can see all these ratios and even much more. Is a website called Screener. Screener.in. You can easily customize this website as you want. So just for your purposes, I have put in everything over here which I could find relevant. Market cap, stock P, return on equities, how much debt the company has, what is the PE overall, the stock P, then last year's earnings, debt capacity it has to pay, book value, net profit margin last year, everything is available. Promoter holding, return on equity, cash at the end, enterprise value, face value, dividend, whatever it gets, whatever you want. Then about the company, you can get key business points, you can get in which company it is. So this is how you can compare it. You get an overall chart comparison over here. Then though we have not done, but you can put in averages, which we will go on further and see volumes are there. Pros and cons according to them they give. Then they give you a peer comparison. Now look at this. Look at the PE for Syngene, which is at 56. Enrest, Elkem, Torrent, Dr. Reddy, Cipla, those are in mid 20s or late 30s. This is almost 2x or 1.5 times the other pharma companies. So it is not that this is a bad company, but the price is too high compared to its earnings. So similarly, similar companies we can get at a lower PE. So at correction, a Cipla would be a better bet for a longer term investor compared to Syngene. Because if you see the overall profit growth, it might be almost around those similar kind of levels. So that is how you can compare companies. You can see quarterly results of this company, P&L, balance sheet, cash flows, ratios, shareholding patterns, and also other documents or something which company has released. So what we saw in BSE and NSE, this can give you a peer-to-peer comparative view, and this is also completely free to explore, and you can export to Excel also. So certain features are paid, but most of the features are free. So this is another site which one can explore to see data before and also after entering a trade. So we have already seen price to book, return on equity, what it is. I am not going into the actual accounting calculation that what is the book value or what is the price, and you divide price by the book value to arrive to that ratio, or how a return of equity is measured, because those all are of a very basic purpose. But even if you want, in this presentation, we have given it. So if you want, we can share the presentation by the end, or by Monday or something like that. Once, if you want, you can request to us. Now, data points to be checked before executing a trade. Now we come to the technical part. So till this point of time, it was more about the company, what it is doing, what are the overall profits of the company, or what is the market cap of the company, who are the shareholders, are there institutional holders or not, how is the overall market cap, the 52-week high, 52-week low, what is the current price and all what we saw. Now we come to the price part where we want to see how we can predict the price, or how we can see above which the company will, the stock will be in momentum, or where to decide the stop losses. So one of the critical parts to do that are 4 things or 5 things which I will be going through into this presentation. So first one is the pivot levels. Pivot points are important because for traders, it will be using the open, high, low, and close from the previous day to decide the supports and resistance for the stock for the next day. So this is basically giving you for the next day, if the stock breaks a particular level on the downside or on the upside, the direction on that particular side is likely to happen and at a rapid pace. And the more it keeps on breaking it, the momentum becomes more stronger. And the second is the average traded price. Now it acts as an trading benchmark which traders can use, and it gives you an average price for that security. Throughout the day, considering the volume, what is the average traded price? So ATP, as I had showed you in the BSE and NSE, it is available on live basis. So there you can track, and it is important because traders generally look at that price to enter or exit that stock. So if it goes above it, the momentum starts to build up. And when you combine these two together, if the stock is trading above ATP and if it has broken above one of the pivot levels, then you can get a double confirmation to go. That is the reason we are taking these two topics together, so that you all can understand how, by looking at the overall BSE website and having the simple Excel calculation, also you can see momentum coming up into the trades. Now, how the pivot is overall calculated. What you would be requiring is you will require open, high, and low for that particular stock to calculate pivot. Now, how do I get all those things? So you can get that from the NSE's website or also from the BSE's website. So once you go to the NSE's website, search the stock name, click on historical data, select the period time, then download it into the Excel using the formulas to calculate ATP and pivot. Now, we have shown you that, see here, if I'll first show you here and then I'll show you on the live basis also. So in the NSE's website, you type a stock, say for example, Reliance. Here you will get a particular thing, that 1 day data, 1 week data, 1 month data, 6 months data, 3 months data, 1 year, or from a particular date to date you want. Just select it, filter it, download into a CSV file. So you'll get an Excel file, and then you can use these formulas to calculate. I'll keep this formula sheet over here. First, we'll just actually go to the site and see it. So you go to NSE's website. Equity is here, what you click. Historical data is where you go. Then say for example, 1 month I want. So this data is displayed here. Just click here, download CSV. You open it and you'll get 1 month's Reliance data. Now what data it gives you? It gives you open, high, low, previous close, last traded price, the close, weighted volume average price, 52-week high, 52-week low, volume, value, and number of trades. Everything is given over here. Okay. Now, what you can do is you can just put these formulas. You can put these formulas and calculate the pivot points. So first and foremost, we'll calculate pivot. Okay. So to calculate pivot, it is nothing but the high plus the low plus the previous close divided by 3. So you need high, low, and close of that day, and you divide it by 3. Okay. Then you calculate the support 1 and resistance 1. So it is nothing but 2 into the difference between previous pivot point, that is this pivot point, minus the high plus the high. So that will give you the first support. Similarly, pivot point minus the low plus the low into 2 would give you the resistance 1. Similarly, pivot minus the support 1 plus the resistance 1 will give you resistance 2. Similarly, pivot minus the support 2 plus resistance 2 will give you resistance 3. And similarly, pivot minus resistance 1 minus support 1, resistance 2 minus support 2. So this will give you pivot, support 1, support 2, resistance 1, support 1, resistance 2, support 2, resistance 3, support 3. So this is how you can calculate it. And just to show you the overall calculation, say for example, I have these set of stocks for which I calculate pivot. So what I need to do is the stock open, high, low, close. Now, if you want multiple stocks on a daily basis also, then that can be done through a bow copy. I'll show you that also. For at least the FNO stocks on the NSE, you can download the bow copy. And because if you can do it for the cash market, it will be a little bit of troublesome because it will give you the entire cash list stock, then you have to filter your own stocks. So for FNO, you download it, you put here open, high, low, and close, and put the formulas in the Excel. So this automatically it will calculate. But this is nothing for rocket science. If I'll show you, it does basically high, low, close, divide by 3. This is the formula which I had given you there. And you calculate support 1. Support 1 is nothing but high, pivot minus high plus the high. Similarly, resistance 1. Same formulas I've used, I've done nothing else. It's just that I have put that into the Excel. 2 into pivot minus the low plus the low. So you just have to put that as a formula and get it. Similarly, then you can get support 2. Support 2 is nothing but pivot minus the difference between the support 1 and resistance 1. Okay. Similarly, resistance 2 is nothing but pivot minus the support 1 plus the resistance. So this is how it's simply in Excel you can put it and you can get it. So there is nothing often thing, but at least on daily basis you will get these 4 levels for a stock. And once the stock goes above pivot, this will be the first resistance for the stock. Once it crosses this, this will be your target. And once resistance 2 is crossed, resistance 3 would become your intermediate target for the stock, and R1 will become your stop loss. So this is how you can get a trade. Above pivot, you can buy with support 1 as a stop loss. So 704, just I'm taking for an example Adani Port as it is the first stock over here. Say for example, this was the data what we got yesterday, Friday's close. Say pivot is 704. So if the stock crosses 704, I'll buy with stop loss of 696. So that would give me an 8 rupee stop loss. My first target would be 717, which is almost around 13 rupees. Okay. So once it comes to 717 and it says it crosses 717 also, or it touches 717 and starts coming down, then I'll book it out. And then I'll wait. Once it crosses 717, then the next target will be 725. Generally, the difference between R1 and R2 would be very small. So this would be your intraday trade. But for that, you cannot put pivot as a support. You need to take 1:1 as your stop loss. So 717 to 725, it is basically 8 rupees. So 8 rupees would be stop loss, would be 709 as a stop loss. Okay, 1:1 you generally take, but from R1, if it R2 is crossed, R2 to R3 can be a 1 week kind of a trade, or 3 to 4 days of a kind of a trade, because this is almost a jump of 20 rupees. So 20 rupees is more than 3% rise. So with a stop loss, a very small stop loss. So this will give you a 2 to 3 days kind of a trade with a perfect risk to reward ratio. So one trade can be crossing pivot, R1 can be a target, and S1 can be a support. Similarly, can be done on the lower side also. You can short the trade also. So this can give you good particular list of stocks which you can watch and take. So it is up to you how many stocks you want to keep and keep on your radar and watch it. ATP is nothing but the total turnover value divided by the total volume, which also is available in this Excel which we downloaded. So it says basically value divided by volume will give you the ATP. It is nothing more than that. So I'll keep this slide over here for a couple of minutes. You can, or a minute or so, you can just take a photograph of this if you want to, then we'll move forward. So now we come to moving averages and crossovers. So moving averages and crossovers, basically there are certain averages which, as most of us traders, we keep on looking at it. So there are generally 50-day, 100-day, 200-day moving averages. For shorter term traders, it is 21-day moving averages also, because generally in an expiry, there are 20 to 21 trading sessions. So that is the reason we take 21 as 1 month average. Then on an average, 50 and 100 are the moving points, and 200 is basically the entire year. In a year, there are nearly to 200 trading sessions. So that is how the 200-day moving average becomes very important for longer term trends. Now these averages can be calculated in two particular ways. First is a simple moving average. It is nothing but a consolidated price action for that particular month, all the closes, and divided by the number of closes. So just if I want to calculate in moving average, if we say if I want to calculate a moving average for this, then how does it? This is, I'm just showing you for an illustration purpose. You might not need to do all these Excel calculations. Moving averages are available. I'll show you that also. So I'll just sum everything. So this is the previous closes. So this, okay, this is the total, and number is 22. There are 22 price points. So let me make a 21-day moving average. So this is the total, and if I divide this by 21, this becomes its simple 21-day moving average, which is a 2450. So about 2450, you can see some strong momentum coming in Reliance. This is just an it is not anything that I'm telling you because I have taken. It shouldn't be like that. 29 December should be avoided, and we should have taken data from 30th December to 28th of Jan, from most recent to it, to get it a little accurate one. But since we are not going to spend time calculating each and every average, it is just that, to understand, I'm telling you how it is calculated. The exponential moving average, it is a weighted average. It gives a greater importance to the most recent prices than the previous prices. Generally, there in the simple moving average, there is a possibility, that if there is 1 day of a sharp move, say for example, in this previous closing price, 1 day there was a sharp downfall in Reliance where it went to 1800, let's say. So then you see how much bigger of an impact it has. 2452 was our earlier average, And if we take this to 1800, the average dips by 25 rupees. So to avoid this, because this was at the start of the period, okay, if that happens at the start or if it happens at the most recent time, this will give the same weight to all of them. But the exponential moving average, it gives more weight to the recent price moves than to the previous to capture the recent informations more accurately. Say example, if Reliance result had come and there was some very bad result and you had seen a very sharp correction, so an exponential moving average would give higher weightage to that new information than to the older information, which makes a little bit more sense for the traders. So whenever if a trader is using an average for a shorter period, it is always better to use the exponential moving averages. But once you go to the 100 or 200 day, it would not become so much relevant because the weights would almost be similar. So it would be better to use a simple moving average than an exponential one. But for 21 day or shorter period, it is always better to use exponential moving averages. Now, what is the importance of 100, 200 day moving averages or 50-day moving averages? Or what is a crossover about? Say this is what a simple chart. Now I'll also tell you the website where you can get all these also. It is available again for no charges, or it is there in the website to use for everyone. Now you see this is the 50-day moving average. Now how many times, this is for Nifty what we have taken. It has taken support at 50-day moving average and again gone. The moment it breaks and sustains for a 2-day, you can see the fall. It directly comes to the 200-day moving average. Intermediate somewhere here, there was the 100-day moving average, which it tried to hold, but it did not hold. It moved and then again it tried to touch the 200-day moving average. Again, once it crossed and sustained the 50-day moving average, you see the overall sharp rise. And in recent day, we tried to bounce from 50-day moving average. Next day, we gave it very sharply. And now you can see how these days we are behaving around. We tried 16,600 was a 200-day moving average. Our low was almost 16,836. So almost 100, 200 points near the 200-day moving average. And we have bounced, which was similar here. The gap was almost similar over here and we bounced. And now again, we are at around 17,100 levels. So this is how the 50-day and 200-day moving averages are important. Now, what is a crossover? So crossover is nothing when a shorter term moving average, it crosses from below or above to of a longer term moving average. Generally, crossovers we see is between 50 and 200, where a 50-day moving average, if it crosses over from above or below, would give you an indication. So if a 50-day moving average crosses from below to the 200-day moving average, that means shorter term moving average is rising very fastly and the longer term moving average is rising slowly. So that crossover will happen, and that is known as a golden crossover. While as if it crosses from above, it is called as a death crossover. So that also gives you a beautiful signal on the direction, in the particular direction the crossover happens. Say for here, this is again Nifty, and these are longer term charts, on daily chart only, but for a longer period, where if you can see for 8,000 we have captured Nifty. So see this 50-day crossover, golden crossover happened here. So we had seen from 8,000 odd levels to almost a run of 9,500. Then again it crossed here, could not sustain, and it again gave a golden crossover over here. And then you can see it never touched each other till a very sharp run until here. And then again a crossover on the upside, you see a momentum. So from this rally 2008 past, this would be till 2008. 2003 to 2008, we saw that this dead crossover did not sustain much. Okay, but then this sustained, and you can see the amount of fall. And again over here we found that crossover, and then see the run. So this is how this are for a little bit of a longer directional trends which you have to see. intermediate, then you can again see it almost touches the 50-day moving average and bounces back. Overall, it was hugging the 50-day moving average and moving. In this sharp run also, 50-day moving average always act as a support. So you can see this crossover, the overall trend is positive, then support levels would come at 50-day moving averages. Sharp corrections happen till 50-day moving average, then it sees a rise. Then again back to 50-day moving average, then again a sharp rise. So that way you can always see the longer term directions through this averages. Now RSI and stochastic. So these are two very common indicators which are used. And what happens is that, through these indicators, you can see the overall momentum which is happening into the market, or shorter term momentums. So the indicator was originally developed by Junior Wells Wilder. So it is a traditionally single indicator which was used at that particular point of time. But now, since it is very widely used, it is used in conjunction with the averages. You can again say RSI is 21-day moving average or 14-day moving average with the RSI, and then similar crossovers can be put in RSIs also. And similarly, stochastics is there, which again gives you the momentum for the trade. So stochastics is a little bit of an indicator which is more dynamic, and RSI is a little bit of a slow mover. Now, I would not, I'll show you on the practical terms. So where you can, get all these datas much more. So there is a site called in.tradingview.com. So if I put anything over here, it will take me to the chart. Here you can put all your indicators and everything, and price patterns and averages, everything can be done over here. You can create alerts, but that is page one. It is not for the free one, but still some part you can be used, all your indicators and everything. Deepak ji. Deepak ji. Participants, you need to give me just 5 minutes. I'll come back in 5 minutes. Deepak ji, if you can listen me, can you just take over for 5 minutes? Yeah, extremely sorry for that interruption or that break. So yeah, what we were talking was about the averages. So here is what there's a site which is in.trading.view.com where you can get all the charts, indicators. You can even draw trend lines over here. Say for example, if you want to draw any trend line, you can draw a trend line. You can do your all technical analysis over here. You can put your overall, say for example, this is one thing which I had made earlier when I was trying to explore this site. You can put all kind of indicators, whatever you want over here, and see if it whatever works best. Even averages, if you want to put moving averages, that is also what you can put over here. See, there is everything over here. You want technicals, if some financial things also you want to see overall, then that you can see over here. Say for example, if I want to put average, a moving average. So a moving average will come over here. You can go and change. Say you want from 9 days to 21 days. Okay, so then this will become a 21-day moving average. Okay, so for Nifty also, if you can see a trading 21-day, this is a simple moving average. You can change it to exponential also if you want. See, time frame length, source is close. Okay, style. So you can always visibility, how you want, all things can be customized over here. So the length is 21, time frame is on the chart. Okay, so you can see how 21-day moving average support it has taken and it has gone up. If it breaks, it goes. This entire rally, it has always taken the support of 21-day moving average. Here, once it has broken, it could not surpass it. It goes again, it could not surpass, it goes. Then again, it crosses, you see a sharp rally. Again, it has gone down. And now once we go above this, we'll see a good rally. So this is 21-day moving average. If I want to make it to 50-day, or say if I want two moving averages, so then I'll again go here, technical. Now, oh, sorry. So moving averages, 2-line crosses. So that you can put here. And it will show you where it crosses. So moving 2-line crossovers were here. If you want, see below it has given you the moving averages line. If you want, you can minimize that and just take the indicators over here. So that is also possible. But if you find that this moving 2-line is a little bit more confusing, you want simple. So remove this. Moving averages. Put another moving average. Make this 21. So now you're 21 and 50. You see, this is where, make 21. So the red one is 21, the blue one is 50. So see, 21 has crossed above. So this is a negative crossover. It has crossed from below. But so we can see that, overall from here, it has given a reverse crossover. Again, if you want to see that a golden crossover or death, so then you can change this input style to 200-day. And then you can see, has it done? Not recently. So you can have 200-day moving average. See here the support which I was talking in the chart which I had shown you, where the 200-day moving average was at 16,200, and the low for that day what we made was 16,400. So almost around 200 points of a gap. Similar gap was seen here. The moving average was around 16,600 and the low for that day was 16,826 or 36, something like that. Was 36 was the low, 36. So around similar, that kind of a gap as well, we have seen reversals. Now, this can be done from here to date, 1 year, 5 years, all. Okay, so then when you do 1 year, you have an option of daily. But since once you go above 1 year, it will automatically convert to weekly. You can do daily also and see. So this is the daily chart, but then you need to squeeze it or go there to see the different lists. To see the entire chart, you need to narrow it. So all your technical indicators are available in this site. Even if you go here, go to technical, say RSI you wanted to see. So this is relative strength index, RSI. Put RSI, then stochastics. See that it may indicate you trials also. Then stochastics. So basically you can get two indicators at a particular point of time. So say if I close this averages and then I put indicators. And then you have stochastics also. Let me do a year to date, 1 year. So now why I was telling you, our RSI and stochastics are important. If you see this purple line is the RSI line and this is the average. But generally whenever you cross it from above, you will see that the fall starts. Now if I can make this 3 months, so this is where you can use RSI and all, where it is a daily chart, and let me select time frame for 6 months. Yeah, here you can see yes. So here what you can see, what I was telling is when it RSI cuts from above, you see the fall in Nifty also. Now let me get this chart a little bigger. Yeah. So now if we put RSI in again, yeah. So once you see if this is cutting it from the top and it is not, and then it starts falling, you can see the continuous correction into the market. Now it has again taken some support over here and reversal. So we can see now this fall has stopped and this has a place to go over till here. So this yellow line and purple line, whenever it crosses, the momentum becomes strong. You can see the crossover was over here. You may not catch the bottom. So I understand this is not an indicator which will help you catch the bottom and the top. It is more to see for you to catch the overall trend. You may not catch the bottom and top is again what I'm saying. See, the crossover happens over here. And then you will see the trend continues. It tries to go below, it doesn't go. It might not give you the top also. Top was formed over here, but you still will hold it on until unless it does not go below. So here it goes below and the second day it sustains. Now you can exit your position. And this would also mean that, you don't short over here. You don't short over here. Okay. This indicator, if you will try to use on both the sides, it will always give you a whipsaw. You don't close your long over here and go short also. The overall trend, if you are seeing, it is on the upside only. It has not breached any support or any resistance. It has not breached any support. It has not gone below any previous thing. So I would advise use only this for one direction and not for two direction. Once it has broken, you can see it is now consistently below and falling. So wait till the fall is complete to enter a long position. Or if you have a long over here, exit it. Exit the long, wait for the correction to complete. Now it has shown that from next 2 days, last 2 days, it has shown that, okay, it is good. Even in the fall, which it saw in this day, it has not corrected. So you can buy. Even here you can buy and wait till it again shows you a reversal sign. So this consistently happens. If you see here also, it has broken, it has gone up, again it has broken, you exit the trade. It has gone up, you buy. If it goes down, you exit and you wait. Again, it will give you a direction over here. So it will give you an entry exit point, but I would always prefer you stay on one direction and don't try to play both the directions. Again here, you can see it has crossed over. Here you exit it, wait for a crossover to happen. It happens over here. You get it over here. It then leaves it, exit it. So this will give you frequent trading opportunities in the index or in the stock. This is what we saw for the index. Similarly, we can see for the stock. See. Yeah. So I am catching any random point, but it will break out. It gives you an up move. Then exit. Exit, exit, exit. Now it has given a breakout. Okay. But again a breakdown. Breakdown, breakout. It will give you multiple entry exit points. So a trader can particularly, this is a breakdown. Now it has given a breakout. So again, it is a good point. Let me make it clear. These are not trading recommendations which I am giving you over here. I am just showing you how to identify stocks for trading perspective. So this can be done. This is what we are doing in a 2-hour thing. This can be done in daily also. Let me put a daily chart. So daily also it will give you similar trends. Okay. Say daily Reliance is still showing a weak trend. On daily basis, it has not given you the cutover, but in 2-hour chart, it has given you. So whichever time frame you are following, follow that only. Don't try to juggle between time frames because each time frame will give you different result. If I am a daily trader and if I'm trading for at least 4 days, 5 days or week or more, I'll follow the daily trend. If you are in short-term trader 1 or 2 days, you can follow 60 minutes, 2 hours, whichever is comfortable. Generally, we follow 60 or 75 minutes, which are much more easier to manage. So what you can do is here you can go, you can put 45 minutes, 1 hour, 1 hour is 60 minutes. So that way you can do 2 hours, 3 hours, 4 hours. Generally it is 60 minutes or 30 minutes, which are preferable, which you can do over here. Or so that way you can follow these trends. So this is how. Similarly, if you see Nifty, in daily, it has not given any indication, but once we make it 2 hour, it has given me a buy indication. So if I am an intraday trader, I'll do this and I'll follow this only. Then I'll not see that has it given it in daily? No, but it has given in 2 hours, has it given in weekly, has it given in monthly. If you keep on juggling between time frames, you'll not make a decisive decision. 1 hour, no. 30 minutes, no. 2 hours, yes. Follow a time frame and stick to it because it will be much better to do it. Similar, what you can do is you can combine indicators. You can add a stochastics over here to get more comfort. Stochastics also works similar to RSI, but it is much faster. You can see this is a smooth index. This is a whipsaw index. Okay, it will give you a little bit early indication than compared to RSI. See, it had already given a sell over here where it has broken it, while as RSI comes over here. It's a little early indicator, but generally would work in conjunction with RSI. This is yet not showing a buy. If I will see, stochastics is yet not showing a buy, RSI has shown. So if you want to wait for this also to turn positive, you can wait and see. And generally, these are the lines in between the purple line and the blue line, which you are saying, the highlighted one, is the range where it will play more well. Once it goes above that range, the volatility will increase. So this is how you can combine it and use it. And this is completely available free for everyone. You can put 2 indicators at a particular point, and then you can subscribe if you want. There might be some charges also if you want to put more indicators. So see, this is similarly graphs. We have taken it from that site only for your illustrative purposes. This is what we use, Spider. This is a paid software, but it has similar. You can see I've put stochastics and RSI over here also for my reading. And if you want to see, this is where I've put averages. So this is 50-day, 200-day and 100-day averages, which we have talked of. Is similar what you have seen. See, you have got here 50 and 200-day crossover happened over here. And after that, this is the golden crossover, which we have seen. We have touched the 200-day moving average. After a golden crossover, if the stock takes support at 200-day moving average and starts moving, that would give you a very good trend. You see, this was a death crossover over here. Okay. Death crossover happened. It did see a rise. It touched 50, but it crossed and it never came back. So at this particular juncture, you need to be careful. A death crossover, and then you are crossing one of the averages. That means the strength is weakening. So that way you can take this, you can see as many number of years you want and see it. So this all averages and all are very important, and it should always be taken into consideration. And these are simple tools. They are nothing is complex. That is a very easy graphical representation which you have, and we have given you the avenues where you can see it and learn it first without any cost. And then if you want, you feel that you are comfortable, you want to make some payment for the subscription and do it, then also you can do. So Deepak, should we open the floor now for the Q&A?
Definitely. We'll take first question from Mr. Govind. Mr. Govind, you can unmute yourself and proceed further with the question.
Thanks. Good morning. Actually, I had that India Mart on rallies का ऊपर मुझे जरा ये करने का था. India Mart 10 है, I'm having a rallies 400 का ऊपर है. High cost है थोड़ा.
Sir, I guess so. We would not be taking stock specific questions over here. Anything related to the seminar, we would take it. That stock specific question, I can take it offline with you on Monday itself through your RM or the zone which you are into, region which you belong to. You can connect with me and I'll take all your stock specific queries on offline. I think it will be much better for you and me and for all other participants also. I hope you can understand on that.
Okay, thank you. No problem.
Next question is from Mr. Narayan Hegde.
You can unmute and ask your question.
Sir, you could unmute yourself and ask the question. Mr. Narayan Hegde. Okay, we'll go to the next participant. It is Mr. Rajkumar Khemchandani.
To unmute, Deepak, you need to unmute yourself. You can unmute.
Mr. Rajkumar, you can unmute yourself and proceed further with the question. Okay, we'll go to the next participant. It is Mr. Sarvesan from Kerala.
Kindly show the stochastic slide, explanation slide.
Sure, sir. This is the slide you are talking, sir?
Thank you. I'm taking a print screen and I want to put in my notes.
No issues, no issues. Sir, if you want the presentation, you can connect to us and we'll share you the presentation itself.
Okay, thank you.
Okay, we'll proceed further. We have got next question from Mr. Venkat.
So you can unmute and ask your question.
Yeah. Hi. I just wanted to know. We get the brokerage in between, right? That point for when I'm buying a stock for 100 rupees, then there is a brokerage amount getting calculated. I try to calculate it is, I think for IDBA it is 0.5%, but I was not able to calculate correctly when my formula is wrong. Can you guys show me how to calculate the brokerage and as well as the tax that is getting levied while doing the trading?
Venkat sir, your account is in which branch?
In IDBA, means Hyderabad branch, means Hyderabad.
Sir, you can note down one number. It is 9393.
Okay.
43. 6222.
9393 43. 3. Okay.
6222. Branch head name of Hyderabad is Mr. Venkat Reddy. You can speak with him after this presentation and he'll be able to help you out for this query.
Okay.
Okay, sir. Thank you. I request participants to ask only questions related to today's presentation. We have got next question from Mr. Arman Raju.
Hi. Hello.
Yes, sir.
Yes, sir.
Hi, this is Raju. First of all, let me thank you guys for taking out time and enhance a bit of our understanding on this subject. Now, my question is basically on this indicators which we are looking at for a long-term trade. What is the time frame we should be looking at actually? A time frame in a sense like for 3 months period should I take the view, or 6 months period should I take the view? And then from a movement side, like from a day, for a day or half an hour, 1 hour, 2 hours, which you were explaining, but I think it was for the trading purpose. But slightly longer view, if I have on that asset which I want to hold or which I want to buy. So what is the strategy you would suggest?
So what I was explaining was not only relevant to trading, but also it would be relevant for you if you want to invest for a longer term, for more than say 2 months, 3 months, 6 months, 1 year or 5 year perspective. Only is that the time frame changes, but the overall theory remains the same. Say for example, if you are looking for a 6 months to 1 year of an kind of an perspective, you can look at a daily chart, every day's moving average, every day's chart for at least a 200 to 250 days period, that is 1.5 year. Say if you are looking for something which is in excess of 1 year, or your horizon is 2 years, 3 years or 4 years, you can look at the period for 1 week point of view, so that you can look at weekly charts or monthly charts, which will give you a longer term period. So that way the time frame changes, but similarly the moving average supports, the RSI movements will also change their calculation based on which period you are looking. So
All right.
the whole theory remains the same. It's only the time period. If I am a trader, I look at 60 minutes of movement because intraday movements are important for me. But if I'm
Understood.
an investor, my horizon is 2 years. What is moving within the day is not of much relevance for me. But within a week or a month, how the stock is moving might be a little bit more relevant for me.
All right. Yeah, thank you. Another question. I mean, it was a very quite enlightening session. Now I see a lot of candles formation. Would there be any other webinar on that? Like, how to read those candle formation and how do you interpret those formations actually?
So
And does
we
that
are
really help actually?
Yeah, so we are trying to do that, but we would, so what we did is previously we started with very basics of derivatives. So here we have touched very basics of technicals, because, directly if I'll take you to the price patterns, maybe you might be doing it, would be comfortable to you. But then other people taking directly to patterns without understanding what a chart is or what a candlestick chart is or how a candle is formed, it is difficult. So we will take it step by step. Eventually we want to reach there where we have a session which is 3 months long, where every session we move a little bit forward kind of a thing. So that is there in plans. So it will come, and as and when it will come, we will intimate you.
Yeah, thank you very much, Miraj and the team. Thank you very much.
Yeah, thank you, sir.
We've got next question from Mr. Jairam Bhujwani from Jaipur.
So you can unmute and ask your question.
Hello, very good morning. That session was very good. I want to know what the 4 best indicators in your view can be applied for technical analysis, and what is the MAC? MAC.
See, MACD is another technical.
MAC.
MSD, if I'm hearing it right.
Yes. The first thing I want 4 best indicator which can be used in
So
your.
So 4 indicators best. See, I would say which are the most frequently used are RSI, stochastics. Then one indicator is MACD, moving average convergence and divergence.
Okay.
So these 3 are generally used in conjunction because they generally move with a similar calculation. Other thing is you can use is the pivots which we had covered, or the averages for your supports and resistance. So this is generally which one uses are frequently used, and the reason they are frequently used is they are easy to understand and gives a good enough directional for a trader. Now, which
So
indicator you said?
I'm talking about MAC.
M
A C.
MAG.
C. C40.
MAC, yeah, that's what, that is MACD only, moving averages converted to value.
Not MACD. It is MS.
Sir, I'm not aware about that kind of an indicator. You need to give us some time to,
Okay.
read about it and come back to you.
Okay. Okay.
Okay, we have got next question from Mr. VK Gupta.
Yeah, actually, while applying this pivot formula, you showed those that Excel sheet, no? Then also you
Yeah.
told that you will tell us that how to download the data for different equities. So I think if you can show it, it will be nice. How to download? It's only previous data, 1 day data, which is applied on the various. Yeah.
Yeah, multiple stock data which you want, multiple stocks,
Yeah.
open, high, low, close. Yes.
Correct.
Yes, I guess I had I missed that part. Just a second.
Yeah.
So you go to the NSE's website, be it the new one or the old one.
Okay.
So first I'll show it you from the old website. Once you go to the NSE's website here, there is an option to go to the old website over here.
Yeah.
So in the old website, you go to products. From products, you go to equity derivatives. You come down, you'll have current market reports. You go to view all reports. In that, you will get daily Bhav copy file in CSV. So this will be for that particular day only. So this is for 28th of Jan. If you want historical data, the path is same, product, equity derivatives. Instead of current, you move to historical data. Historical data, archives of daily reports. You select the report, Bhav copy. You put the date which you want. So for example, 27. Get the data. You can download that Bhav copy. So this is how you do it in the old website. Now, similarly, in the new website, you go to market data. In market data, daily market reports. In your daily reports, you first move on to the derivative segment. Okay, daily reports are already ticked over here. You can see daily report over here. Sorry. In that again, if you will scroll down, you will have Bhav copy CSV. You can download that. So this is how it will get downloaded. And this is how it will look. So this will have your future index, future stock, option index, and option stock. So basically you want if index and options only. You can filter that out accordingly, whatever data you want. There is open, high, low, close, settled price, number of contracts traded, values, everything is there of which date. So this data you can take open, high, low, and close, and you can get your ATPs and pivots from this for a particular symbol. So this is Bank Nifty, Financial Nifty, Arc Industries, ABB, Abboud, AB Capital, all stocks will be here.
So basically, you are getting the complete file, including indexes and
Everything.
stocks.
Yeah. So that is the reason I told that it is always better to stick to FNO stocks, because similarly, if you download the Bhav copy for all cash stock, it will give you entire 3,000 or 4,000 stocks which are there in NSE. Then filtering out 50 or 100 stocks will be very difficult. But generally, if you are a trader, the FNO stocks would be more than enough for you. Because if we see, if I remove the options, if I keep the options, the overall data for all the expiries, it gives you data till 2026. Okay, so this is and 69,800 data points. So that is the reason in this also it will be difficult for you to filter out stocks. But since the segregation is there that you want future index or future stock, it becomes little. If I don't want index, I only want stocks. I can take stocks and the current expiry date.
So it is not possible to download only stock specific data, only one or two stocks.
No, sir. So this is an full file for entire future derivative segment. This is the bow copy. For entire cash segment, there is one bow copy. So whatever data you want to take, you can take it.
So even if I do from the future, there also it will be all stocks and indices
All stocks and indices.
in future and in all expiry.
All expiries, yes. This is a dump which NSE and BSE provides. So basically, most of your softwares also catch data from this dump only.
But it's a huge data, and we want a very selected data. So one has to download the huge data and then again filter it out.
Yes, that is the only way to do it.
There is no other way to stick to some stock.
Individual. So see, they give you two options. Either you take data of individual stocks, so you download individual files for a particular days you want, or you for one single day entire dump. So if you want multiple days and single stock, so that kind of filtration is not possible because you might have an requirement of future stocks for a single day, multiple stocks. I might have a requirement of a single stock for multiple days. So NSE says, according to your requirement, you filter it out and take it. We'll give you the dumps which you want.
No, but pivot formula is only you are suggesting to apply on a previous day data, no?
Yeah, on previous day data. But if I want to take a series of pivots, then I would take, say, once I've done, if I want to do particular advanced analysis, that what is the pivot levels for last 10 days or 15 days or something like that. Once you are comfortable with daily, you want to dig in deep. So see, this is a never-ending kind of an array of topic where you can do multiple kind of analysis on one single particular data points. Once you have the data accumulated with you.
No, but that is more important. If any intraday trader is there, whether he need to see a previous day data only to pivot
for intraday trader, pivot for previous. See, pivot is applicable only for the previous day data. It is just the price also. What I showed you is your price also. Here you have these RSI. These are all on previous data, right? Averages are on previous data. So if someone wants to calculate the average for a particular stock and everything, so you need to download that many files. So you'll only get this kind of a dump. So what you are looking, you need to always filter it out. That way, segregation is not given by the NSE.
You see, there is another data, no historical data for a particular stock, which you told.
Yeah, that will be for one particular stock for number of days.
Yeah, so in that, if we want a previous day data for a particular stock, that we can take to calculate the pivot levels, no?
Yes, you can take both the data is the same one.
Yeah, because for pivot levels and this S1, S2, S3, R1, R2, R3, you need only
that is what I'm telling you.
Yeah, low, high, and all that.
This is open, high, low, close for all the FNO stocks.
Yeah.
If you want, besides FNO stock, then you can go and take it from the individual stock list also.
Okay. Thank you.
Yeah, so Rajkumar, Mr. Rajkumar Kimchandan, you can unmute and ask your question.
Are you able to hear me?
Yes, yes.
Yes, sir.
My question is, what is the difference between RSI and stochastic RSI? When to use each one of them? Same way, when to use the SMA and EMA?
See, RSI and stochastics are two different indicators. RSI stochastics is nothing but combination of both indicators in one. So if you are able to view that in a combination, then you can use RSI stochastics. Otherwise, you use them on separate terms. RSI is nothing but and 14-day exponential average close point. So that gives you that. SMA and EMA is basically when you are a trader, it is better to use EMA for shorter period of time. So say for example, if you are doing using 21-day moving average or 11-day or 10-day moving average or 3-day moving averages, all those shorter, which are less than 1 month of a period, so less than 21 days, whichever averages you use, it is better to use the EMA exponential because it gives more weightage to current market price or the current prices than the previous prices. Once you move beyond 50, the SMA and EMA would not relate any much different results. So it is better to use the simple one. Rajkumar ji, hope that was clear.
Yeah, thanks.
Mr. Kanan, you can unmute and ask your question.
Mr. Kannan, you can unmute yourself and ask the question. Okay, we have got next question from Mr.
Just a minute. Yes, I could be able to do it. Hello.
Okay. Yeah,
Are you
go ahead,
hearing me? Yeah.
Yes.
See, basically what happened, I do intraday trade. Hello.
Yeah, yes, sir. Go ahead.
Yeah, I do intraday.
So you have gone on mute again.
Hello.
Yes, sir. Now it is audible. Go ahead.
I do intraday trade in Nifty. Currently, I use 1 minute chart and 3 minute chart to trade in Nifty. But using that 1 minute and 3 minute chart, it's very difficult for me to identify sometime the trend. Even though if I can monitor the average traded price and all, it's very difficult because the volatility will be very heavy while doing and trading, day trading. Number one. So what is the time period chart which I have to use to identify the right trend? One. And the second question is that, while trading, I could able to find, I cannot ignore Bank Nifty also. Because what happened, Bank Nifty became a subnet of Nifty. So I could not able to manage Bank Nifty movements as well as the Nifty movements. So what are the techniques, simple techniques which I can adopt to manage both?
Sir, I would say you should not use 1 minute and 3 minute chart because you would be entering and exiting trades more frequently, and that would not be a good thing. It is better to use the least we prefer to go down is to 30 minutes. But if you want 30 minutes is what you can use if you are, want to do a trade on a daily basis.
Yeah.
There are two types of traders. One who would, wait for 75 minutes or 60 minutes charts to give indication and enter 3 or 4 times only in a week. Some traders who would not want to miss, even smaller moves. Say a 50 point or 100 point or 70, 80 points of move also. So for that 30 minutes is still fine. But if you go below 30 minutes, it will give you moves for at least 20 points, 30 points, 15 points. So that would sometimes incur, excessive trading, which would not be fruitful. You would be entering within, and in current juncture, Nifty moving 30, 40 points, it happens within 2 or 3 minutes. And so you would see, one candle breakout, next candle breakdown.
Yes, correct.
That is, not manually possible also to monitor. And that would, that is the reason you might be, missing on the Bank Nifty also is what you are trading, because you are too much focused on those small candle moves in Nifty that you cannot see Bank Nifty. And other simple technique, if I can tell you to monitor both, is that, whenever you are monitoring, say if you are using In dot trading is what we had shown, which is an online chart tool. So you have see a list over here.
Okay.
You can see my screen. So there you can add both the indices to monitor the moves. Since from here you can say that if Bank Nifty is moving and Nifty is not moving, so there can be a possibility that Nifty moving, because the components of Bank Nifty are there in Nifty also.
Yeah.
And it is not vice versa, but it is only one way.
Yeah, one way.
Okay, one way. So that way you can monitor both. And plus, see what I have done is since I check Nifty more, I've put one Nifty bracket over here, if you can see.
Okay.
Okay, that way you can put Bank Nifty if you are more frequently trading on Nifty but just want to look Bank Nifty. You can do that also. So these kind of layouts can be arranged over here in this also.
Okay.
But if you are using any paid softwares, then in that paid softwares, there are possibilities like the software which we are using over here. It gives you an option to have multiple charts. Okay, say something like this, where you have two charts open simultaneously for you of two different stocks, where you can monitor both at a particular point of time.
Okay.
So I'm not sure you're using the paid one or you're using the online one, but for both I've showed you the ways to do it.
I have a TradingView paid version, but I don't know. I am not familiar with the TradingView. In a lot of facilities, I don't know. That's really one bad part. But I have a paid version.
Yeah, so TradingView paid version. So these all, so I can do it in free. So you can do it much more in the paid version. In the paid version, I guess this list also increases here. I have limitations of 4 or 5 or something like that. Plus, I have limitations of 2 indicators. In paid, you can add as many indicators. And other thing is that when you don't want, like, see, I have one indicator here, which I rarely see. I have put that indicator, but I can hide and unhide also.
Okay.
From here, my screen is visible. See, that is where you can do it. You just click on that particular level and say, if I want to do RSI, if I want to hide, I go to that indicator. There is an eye kind of a symbol over here, which will pop up as hide. If I click on that, it will hide it. And click, it will unhide it. So that way you can do it. You can move the pane down. You can move the pane up. However you want to customize it.
Okay. See, my next question is that whenever when we do trade, we could able to see that 15 minutes goes for long unwinding. 15 minutes sometimes it goes for short. 15 minutes it can go for long. 15 minutes it can go for short covering. So can you? But it is not only. I cannot say only 15 minutes. It can be going for a half an hour or 1 hour or whatever. Is there any time limit is there for this type of operation? That is, I can take it half an hour will be there, or 1 hour will be going in this method, or any time limit is there for anything?
No, sir. These are technical analysis is a combination of both, art as well as science. So the mathematical part is not time restricted. So it shows.
No, because there is no time limit, right? It can go for a full day also, for
full day also, yes.
Long unwinding also.
Yeah, for example, if I cannot say that shorts will only cover for 15 minutes and after that shorts don't cover. If they feel that they would spread the covering throughout the day, they can do it. If they feel I want to do it where right now, they may do it everything at a particular point. So no time limits can be attached to anything.
No time limit can be attached to that. So it can be for an hour also. It can be for half an hour also. Currently, I'm seeing
for multiple days also.
Yeah. Because currently, I've seen in Nifty, sometimes it goes for four cycles. Means every 15 minutes, one cycle I can see like that. So 4 cycles. Sometimes it goes for even 2 cycles. Sometimes it can go for 1 cycle also. We are unable to predict that also. Okay.
So it will give you the direction, but for the time frame, the direction will last. It is not possible to give from anywhere.
No, there is another problem also I noticed. It is not giving the exact direction also. What happened once the this short is end, then only it restarts the other program, right? Other movement. So by the time the 15 minutes message we get that short is going on this 15 minute, and we get the display of short is going on, but the market may go in long also. during the time?
See-
Because when I
see,
go for, because that is the history. Basically, what you display on the screen is the history of the past.
That's what I'm telling you. See,
Yeah.
technicals is science as well as art.
Okay.
The science part is a little bit what you can do on the calculation part, but how
Okay.
to interpret that calculation would be different for you and different for me. And
Okay.
you might be looking, see, market participant, you might be looking at 15 minute. I might be looking at a daily chart. So interpretation for me and you would be totally different. And
Oh,
acting also will be totally different. So it is a dynamic part. So that way it cannot be that first shorts will only cover, then only longs can happen. Shorts might be covering, longs might be building simultaneously.
yeah, correct. Yeah, I can
So-
understand. I can understand. The
That way
people
you
who
need to,
are doing
yes.
short, the other person can only cover up also.
Yes.
Okay. Yeah. Yeah. So it can happen simultaneously. Yeah.
Yes, it can happen simultaneously.
Yeah. Okay, sir. My another view is that as you have this video was some extent I found some useful video. Is it you will play? Put the video in YouTube or this recorded view?
No, we can share the recording with you. You can, share or email us. If you want, you can note down the email address. You can mail me at miraj.vora@idbicapital.com.
Okay.
Or, any of the regions which are displayed on your screen. The region you belong to, you can mail them that we want the video for this recording. So they will forward it to me and I'll share the video.
Yeah,
recording.
fine. That's good. That's only you will like to share with only IDBA clients. Okay, very good. So no problem. I can send a mail, sir. There's not an issue at all. That or I can ask my RM to talk to you
You
and
can,
get
that's what I'm telling you. You can.
I'll talk to my RM. I think my RM is Priyanka Chintani. So I'll talk to her. Then I'll tell her to get the video for me. Okay, and she's helpful to me all the time. So you are saying me to go for at least half an hour chat, right?
Yes, at least 30 minutes.
30-minute chat. So that will help me to identify the trend, what trend it is running and all. Okay, fine. And see, most of the time, what happen while trading, being a small client, we are not having huge money, right? So we cannot just put stop loss for 10 rupees, 20 rupees, 30 rupees, 40 rupees, or even 60 rupees. We can't keep that level of stop loss. So how do we play the game without having a small percentage of stop loss, like 2% or 3%? Because when I put a 2% or 3% stop loss, the first market will go and hit my 2% stop loss, and then it will go up.
See, sir, that then you need to, I would say, change a little bit your analysis part from when you are doing a 2% stop loss. You take a 30 minutes chart and you try to enter not at the breakouts but at the support reversal parts.
Okay.
Because entering breakout, generally what happens once you break it out, or if you are entering at the breakout, if you are looking at the 30 minutes, then I would say you look at the 60-minute chart just to confirm it that the direction is same in 30 and 60. Because
30
if the
and
direction
60 minutes, okay.
Yeah, 30 and 60, or you can do is 30
Miraj, your
and
voice is breaking.
Is it clear now?
Yeah, I could hear. There is no issue.
Okay. So what you can do is
Miraj, you are not audible.
Maybe for other customers.
So you can listen.
Yeah, I can listen.
Okay. So what I'll tell you is that you can do is 30 and 60 or 30 and 75.
Okay, 30 and 75. Okay.
Yes. So if 30 and 75 directions are same, there are lesser chances for you to hit stop loss.
Okay. So I need not to use 4-hour chart and none of because 4 hours chart.
You can do is 30, 60, 75 daily for trading. That's it. You should not go beyond daily for trading.
Okay. 30, 60, 70 minutes chart will give a better idea for
75.
75. That will give a better idea for me to do intraday trade. And but as you know very well, because what I said that when we come to market as a trader, we should always think that how much money I lose rather than how much money I make. That's the best strategy to work in market, because market is So basically, what happened? So that we could not able to identify the stop loss position. That's what I wanted to know.
For stop loss,
we could not able to identify the stop loss position, because what happened? The market, the way goes, the zigzag, it is just the moment I put a trade, I may feel that the trade is going to go up. It is in bullish move, so I can see the bullish candle and immediately I can put a trade. Immediately within the second, once I put a trade, it goes down. It within 2 seconds or 3 seconds or 3 minutes time, it again the market trend changes.
So that is what I'm telling you, sir. You are using 2 minutes and 3 minutes and 5 minutes charts, which will frequently make you enter and exit the market, and that is the reason you are hitting most stop losses. So you try and change the system to a little bit longer charts of 30 minutes, 60 minutes, and 75 minutes, and see if still you have some problem. You can tell your RM and connect to me, so we can take it there, and I can still see what system you're using and modify it. Okay, fine. And my question is again is that, so basically what happened, I am a self-learner, right? All these things I learned on my own by trying multiple error and method, and I do a lot of trades in the market and learn. Is there any, now I would like to learn a systematic way. Is IDBI can able to help me to learn the systematic way, like all the informations? Do you have anything special classes or anything is there? So we conduct these kind of seminars, but there are no courses. You can look somewhere if a MSc and BSc offers a particular structured courses, but we try to do these kind of seminars at least 2 times a month or so, where you can register and register yourself, or enroll or log in to get such sessions. But there is no fixed classes kind of a thing which IDBI conducts. Okay, very well, good, sir. Very good, sir. Very good, sir. Yeah, all my accounts are in IDBI. I am, IDBI has given me all the facilities for me at the, including the brokerage plan also, high brokerage plan also, low brokerage plan also. I took everything. I took. Currently, I'm doing well. And let me see. I need more help from IDBI further to do well. Hello. So any help required, you can connect with your RM and tell them to connect for whatever help. So if it is regarding technicals or derivatives or something, so they will definitely patch you and me. If it is regarding with the research also, they will patch it accordingly. So that is never an issue. You can always tell your RM, and I'm sure he or she would be equally helpful. Yeah. Okay. Thank you, sir. Thank you, sir. Because because I can't speak more on other than this exit within the video. I cannot go beyond that. So when you put next session for webinar for derivative, then we can discuss more, sir. Okay. Sure, sir. Okay. Thank you, sir. Thank you. Thanks for your suggestion, sir. I'll apply all your suggestion in my next trading. Okay. Thank you, sir. So Mr. Raghavan, you can you can unmute and ask a question.
Yeah. Good afternoon. Mr. Miraj, yes, can you hear me?
Yes, now I can hear you.
Mr. Vora, I am Raghavacharya. I am from Hyderabad. I am IDBI Capital customer through Karur Vaishya Bank. Okay.
Okay, sir.
Actually, unfortunately, I joined your webinar a little late and missed the almost 3/4 of the opening part. So can I get a full webinar recorded?
Yes, so you can get the recording. You just need to whoever is the RM with you, or say if you are from Hyderabad, so you can just mail the branch manager over there that I need the recording, and they will share it with you. That is not an issue. The entire recording is available.
Fortunately, I have recorded noted down your mail ID, miraj.vora idbicapital.com.
Yeah, so you can just mail it to me. I'll just share it to you.
So that will be very nice of you, because I am a I don't know ABCD of trading, but I am a small time investor. I'm not a daily, short time investor, but I have small quantities invested in some good stocks. Okay. So I would like to know your opinion on that. So can I share my uh, uh,
What you can do is, sir, so I understood. So you want a particular view on the stocks which you are holding. So what you
right.
yes, so what you can do is, whoever is the RM with you or whichever branch you trade, you just send them the list of portfolio, or tell them that, I want to review my portfolio. So they will mail to the research team, and I and my team will go through the stocks portfolio and revert it to you.
Okay, fine. Some minor doubts, like, what is short covering, what is long unwinding, things, people may laugh, but I am really not, it's all Greek and Latin to me. So probably I would like you to, probably this video recording will help me understand all these things, I hope.
So that derivative session is what we have done it earlier in the past day also. So once you mail me, what you can just mention in that, I want this as well as the derivative recording both. So we'll share you both the recordings, which will be, because it's in a continuation, it will be helpful to you. So whenever you mail me, just mention that, so that I'll share both the videos with you.
So nice of you, Mr. Miraj. Thank you very much. I would mail it to you shortly. Okay.
Thank you.
Thank you very much.
So, Mr. Jairam Bojwani, you can just unmute and ask your question.
Miraj, I just want, because I do the positional trading, not on daily basis or intraday basis. So
Okay.
that pivots which I have to calculate, I have to calculate weekly or monthly, and those are available, are workable. And if it is workable and available, are how to do that? Weekly pivots or monthly pivots?
Sir, so weekly and monthly pivots weekly might work or might not work. But what you can do is, on the similar pivot levels, is that you generally put in a trade from cross of R2 to R3 and not R1 to R2, because R2 to R3 would be at least 3 to 5% of move on daily basis also. So that would work if you are, not a short term but a longer term trader. And once it has, entered in your favor, then R2 and R2 and S2 would be your trading levels. Once you enter into that trade, then you move on to the RSI and MACD on daily and weekly charts, which will give you targets for a much longer period of time, and that might help you to revise stop loss also. So you need to mix both of them. Pivots would be on daily basis, and then longer term charts would be on daily, weekly basis.
So weekly pivot are not used.
Weekly pivot might not work, because by the time it will cross your R1, the huge amount of move would have happened, because on week you may see 3 to 4% of move, and on that, if I calculate pivot, it will become 6 to 7% of move. So once you enter a stock after 7% of move, it would be difficult to get another 8 to 10% of move.
Actually, I am prepared to have drawdown of up to 10 to 12%. I have no problem doing that.
Agreed on that, sir. Agreed on that.
I am doing that, Kate. Many times I enter in a stock and they draw down to say 15%. But I still remain in the position, Kate, looking at the charts and looking at my fundamental studies, and somewhere when I'm little confused, I hedged also against that position, Kate. So what will be the best for me? Because I'm not a daily trader. I look daily, I view the market daily,
So
but
that's what I'm. So, sir, that's what my point was. To enter or exit a stock, if you are wanting through pivot, you should use daily only, because weekly would, give you wrong entry points. It won't give you correct entry points. Once you get an R2 crossover, you can enter the stock, and then, for further moves and for further things, you need to look at the daily and weekly charts, where it will give you a 15, 20, 30% kind of a move with support.
I should initiate buy when it passed down below R2.
Yes, R2 would be your entry points, and then you need to further manage this position using daily and weekly charts.
Now I look for RSI and other indicators. I am doing it for last 10 to 15.
Yeah, so that's what that all other indicators only for entry points is what you use pivot, and that to R2, since you are a longer term trader.
Thank you, Miraj. And I also would like to have your presentation.
Sure, sir. Yeah, you can mail if you have noted my ID or any of the IDs mentioned on the slide.
Okay. Thank you, Miraj.
Thank you.
We've got next question from Mr. Dinesh. Sir, you can unmute yourself, Mr. Dinesh.
Hello.
Yes, sir, go ahead.
हाँ सर, मैं पूछना चाह रहा था, एज ए इन्वेस्टर, अगर व्हाट वुड बी द एंट्री पॉइंट एंड एग्जिट पॉइंट फॉर इन्वेस्टिंग इन स्टॉक?
For an investor perspective, then what we covered in the start, and again what I had answered for the previous question for investors also, R2 is a good entry point. But then if you are looking at technicals, then you need to look at the daily charts, daily RSI crossovers, what I had shown you, or moving averages crossovers for investors. That would be much better. Plus, even if you want through pivot, you can use R2. Otherwise, on daily RSI crossovers, what we had seen in 60 minutes or 30 minutes or 2-hour charts can be used on daily and weekly also for a longer term investor also. So the systems remain same. If you are investing
for the long term investment,
that's what I'm telling you, sir. The system would remain the same. But if you are an investor, your time frame would change from hourly to daily to weekly. The concepts won't change. Only your time frame looking would change, because you are looking for 21 weeks or someone is looking for 21 days. 21 weeks would be, at least, 6 months, 7 months, or 50 weeks, which is a year, or 200 weeks. So that way it changes. Only the time frame changes. The systems will remain the same.
in some cases we see that the stocks are their book value is also negative, their PE also, earning per share also negative, but they are going on buyer pack daily basis and moving.
So if you say if you had joined from the start, if I'm not sure if you joined, but I gave a simple example of TTML from 1 or 2 rupees. It was on upper circuit, but it was on a negative earning, negative earnings, negative EPS, no market cap, or whatever it is, and now it is on daily reverse circuit. So when these kind of stocks are there, though people think that it has given beautiful returns if I'd invested at there, but there is no exit right now for investors from 300 to 150. So it is always better to avoid such kind of stocks and always take, because in a rising trend, everything looks good, but when the trend reverses or the trade reverses, then you don't get an exit opportunity at all. And so we always say that companies which are making
profit. What was the reason for TTML for going to buyer pack and seller pack?
See, these are there are no reasons. It is just supply and demand which are created. First, demand is created, and then the people who want to sell, they will create a supply, and then suddenly the demand will be more there. So these are all manipulated stocks, which we would say always to avoid. See, one of the greatest wealth creator in this equity markets globally, he compounds his return. Warren Buffett, it compounds his return at 15% only annually. But if you can do that consistently, he says that, I have been doing that consistently, and you know how much wealth he has created. It is not you don't need to compound it more than 15 to 18% annually. So your good stocks will automatically do it for you. So it is always better to be in stocks where which has history to sustain the down momentum and rise back. So we have seen so many ups and downs, but your good stocks were always there, but bad stocks will always vanish. So avoid those kind of stocks is what I would tell.
So we must not look at the stock is going buyer pack continuously. Means there are some manipulations in that stocks.
Yes, there are manipulations, and always look at the fundamentals first if you are investing for longer terms. If it is a profitable company, then only invest in it. Otherwise, there is no point in investing in loss-making companies.
So first, the company must be profitable. There must be some earning per shares, and book value may be negative of some companies, but running
A negative book value also I would avoid it. You have a good book value, a profitable company, a good dividend.
but some of the stocks are like having good book value, good earning per share, but their movement is very slow.
So that's what I'm telling you, sir. You need 15 to 20% compounding return for the stock. So that way, even if you say ITC is a slow mover, but it has previously compounded wealth for investors at 10-15%. HDFC Bank has consistently compounded at 15%, but they don't move 15-20% in a month. But in a year, at 15-20% of a compounder,
in the year they can give the return of 50 to 20%.
20%. So, but if you consistently get that return, the amount of wealth it can do is the compounding will never be will it turn its magic after 3-4 years only. Since you are an investor, you should have an horizon of 4 to 5 years, and you should see that in 5 years, if it compounds at 15 to 20% or 15% also, in 5 years your investments can double.
No, some stocks we see that India Mart, it is close for 4,000 to around now 9,000. The stock is very good, company is very good, but it reduced again 9,000 to 4,500. So how, we should remain invested in such type of stock, and when we should exit?
Yes, you can remain invested in that particular kind of stock. So that's what if you would have seen the charts on monthly or weekly basis, you would have known that the trend is weak. So you might not have averaged from 9,000 to 4,500 until unless the trend changes. You stay invested, but you don't put additional money at every fall until unless you see a reversal of trend. So that is where technicals and fundamentals both work together.
No, but we see that that technically sound, fundamentally good, but we feel that if we have sold the stock at that time, we could have get good earnings.
Sir, that way, though, everyone would have sold at 18,600 and bought it down at 16,400.
But we could not sell. So what is the criteria for exit in any stock, that at which level we should exit?
See, that's what I'm telling you, sir. If fundamentally, if the company is strong and if you're an investor for 5 years, 6 years, until and unless something fundamentally has not changed, people stay into that stock for longer terms. See, for longer term investor, it is 5 years, 6 years horizon.
Achha.
Then if you combine that with, this year the stock's high was this and low, so if I would have done that, then that is trading. So these are two different things. You cannot combine both of them. You cannot have both things with you, that you stay invested for 5 years also, and plus intraday moves or during the month moves also I capture. So you need to first decide that.
We don't see the intraday movement because
During the month, that's what I'm telling you. So during this year, why India Mart moved from 9,000 to 4,500 is that you have got a lot of competitions. If you would have seen fundamentally for India Mart specifically, if I will tell you, then Just Dial has launched a similar services. Then there are many other companies which have come into similar line of business.
Line of businesses.
Yeah, so those competitions, plus if you see PE of India Mart, it was way overvalued. So valuations were stretched and results were not in that favor. So fundamentally, those things have changed, but the overall business of company has not changed. It is still profitable. So entry points you can decide on technical basis and on your fundamental basis at a high PE. I had shown that similarly, Syngene is an high PE stock. So if they don't consistently give that kind of results, the stock price will correct and valuations will adjust.
And from the current year budget perspective, which sector stock you would like to suggest for invest?
Sir, I would avoid stock specific or those kind of queries.
So
We can take
sector
that
specific, sector only. Which sector
That's
will
what I'm
get
telling you.
benefit?
Queries related to this seminar. You can do one thing. You can connect with me on Monday, and we can discuss that offline. It would be much better.
Okay. Thank you.
Yeah. Mr. Shivtej, you can unmute and ask a question.
Good afternoon, sir. In RSI, there is a 60 and 60-40 levels. Which level you are using?
I'm using 30 and 25 and 75.
And okay, sir. And again, my question is in RSI, when to buy and when to sell? On the graphical disc.
Yes, so when to buy and when to sell, generally that's what which I had shown you. I'll just show you again. So see, if this is RSI, okay, and there is an average also. You can see two lines are there. One is the purple line and one is the yellow line. Okay. So if you see the parameters what are there, the yellow line is just 14-day simple moving average of RSI, and the purple line is RSI. So when the RSI cuts its moving average from below is a buy signal, and once it cuts from the above side, fair over here, then it is a sell signal. So this is the entry and exit point for RSI.
Yes, sir. Okay, sir. Thank you, sir. And sir, the next webinar, any timing over?
It is not yet fixed, but as soon as it gets, we will be intimating you.
Yes. Okay, sir. Thank you.
Thank you. Deepak, I guess there's no more further questions, so we can conclude.
Yes, Miraj. Before concluding, I would like to ask again all the participants to join our Telegram channel. By this, you will be getting all the updates from research team, as well as you will keep yourself updated regarding our upcoming events also. And thank you, Miraj, for conducting this wonderful session. I have already started getting many feedbacks from our today's participants. They have liked this session a lot, especially the short-term and medium-term trends. That is how to initiate a trade for medium-term, crossing resistance 2 level and support 2 level. And they are really liking it. Thank you once again, Miraj. And
thank you all participants also for attending and giving your time. So as and when we come with more such sessions, we will intimate you. And as Deepak has told that you can join our Telegram channel also, and you can communicate to the email IDs and phone numbers which are there on the screen to if you have any difficulty in joining the channel. Once you join the channel, you get many updates on daily basis, which would be even more helpful for your financial journey. So we'll conclude the session over here. Thank you, everyone.